following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Well, I should say good morning from TFNN. I'm on the wrong hour. What am I thinking about? Hey, look, welcome to the January 14th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Just think about that one. Just think about that one, folks. And, hope everyone out there had a terrific Tuesday. It is wonderful Wednesday, and let's make sure that you and I, that we do everything we can to have an extraordinary day. Let's always remember that life happens for us, not to us. When you and I, when we can make that one little shift, how about that? One word makes all the difference in the world. Make sure you choose the correct words out there, because when you and I, when we recognize in reality that life happens for us, not to us, that means that you and I, we can find the gift in every set of circumstances that happens to us. And that is so, so important to living a good life, to being happy out there. And I want you to be happy. Most importantly, though, I want you to know that I'm grateful for your presence here today. I'm here to serve you. That means you can also give me a call. I'd love to hear from you. 877-927-6648. Internationally, you can pick up that phone as well. Call us at 727-445-1044. This is wonderful Wednesday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures. They're trading off 241 points, trading out at 17,294. Today is going to be an important day for gathering a lot of information. You've got the ES Mini trading down 25 points. She's traded at 1990. NASDAQ futures off 42 points at about 41.17. King dollar back 597 ticks right now, mostly courtesy of, combination courtesy of the euro, certainly courtesy of the Japanese yen. We'll take a look at those currency markets. We'll even look at the hard currency markets, such as Goldilocks trading up $9 right now, trading out at 12.43. Silverback 12 pennies. She's trading at $17.03 out here. Light sweet crude flat, trading off 8 pennies. Natural gas on the move. We took a look at the natural gas chart yesterday. We'll take a look at it as well today. Up 16 cents out there. The question is on everybody's mind, is this a significant bottom inside of natural gas? Well, we'll go take a look at the charts and try to answer that question. A quick peek across the globe. We're going to see markets, a sea of red out there across the board over in Germany, at least what we follow here at TFNN, at least what I follow here at TFNN. If we take a look at the DAX, she's down 133 points, about 1 3/10%. FTSE off 2.7%, down 181 bucks right now, trading out at 63.60. Over in Asia last night, the Nikkei off about 300 points, down 1 7/10%. We had the Hang Seng off 103. That was down 4/10, and 4/10 as well over in the Shanghai. That was off 13 points. Our call number again, 877-927-6648. Let's go take a look at our markets first, then we'll come back, take a look at the foreign markets. So the question is, okay, why did Steve-O say, hey, today's a great day for gathering information? Well, let's take a look at the Dow as an example. Dow futures, let me do this here. We're trading right now into this swing point from December 16th. So that December 16th, the top of which is 17,367. You're at 17,294. If we take a look at the daily contract out here, we can see prices move down to its TAS market profile low. That's the support level at 17,262. If we see price move below 17,262, could be a spike or a close below it. Says we ought to test the lows from at December 16th at about the 16,974 range. Of course, we pull this back even further out here. So in this case, we're in the area of really just a double bottom test, so to speak, of that December 16th. So some pieces of information ought to be falling into place there. If we take a look at the S&P futures, let's go see what the S&P futures are doing. They're trading below their market profile. They're trading into that most recent swing point from January 6th. That low out here, 1984. You're trading right now at 1991. You move below 1984, which I suspect it will do. we'll see a move down at least to the 1961 level. That would be a test of the December 16th area. We may even be seeing an A to B equals CD to the downside unfold. Not necessarily complete or anything today, although anything is possible out here. If we pull this over to the side, we're going to find out is, remember that October, you may not remember, but on Halloween, October 31st, when the Japanese finance minister came out and said they were going to flood the money. If you take flood the market with more yen out here, they were going to weaken the yen against the U.S. dollar. If we take a look at that trading session, here is the futures contract from October 30th, October 31st. You can see we're really trading right into it as we speak. Well, we're not trading into it right now, but that's going to be a level, in essence, of support. And we'll see how that area holds. And that's going to be that swing point low from December 16th. Last time down, we held. We'll see what kind of volume we get inside of the market. If we take a look at the NASDAQ futures, right now the NASDAQ futures also trade. Now, the NASDAQ futures really looking more like a potential triple bottom out here because we had the low from December the 16th. That low, by the way, is 4,080.75. You then move down here on January 6th. You get down to a low of 4,082. If you take a look at these market profiles, boy, that support line just continues to extend. We've traded into it this morning at the 4105.88-ish range out here. The actual low so far this morning is 4103.50. So we're in, and if you come further over to the side here, let's do that same thing. Let's draw that October 30th, 31st level out here. Here's October 31st. So you can see we're really coming down into what may be an important level of support. Now, if we break that, what does that mean? You know, if we just simply take a look at the NASDAQ, you could draw 2A to B equals CD to the downside patterns out here. And so it's probably the NASDAQ where we get that first piece of information, the way that price is traveling now. That first piece of information, if we do see a break of the January 6th swing point, I'll go with this A to B equals CD to the downside. That'll give us a price projection in the 4,013 to 39.48 level. Now, remember, that all-important major bottom out here. The market's not going to move down to that October 16th, October 15th level. All that it's really doing is setting up a Gartley buy pattern. That Gartley buy pattern actually comes in right around 39.37. So 39.37, 39.48, that may be the number out there. And, you know, that was a nice move that we had off of October 16th. The market is scheduled to form a nice bottom of the year in January out here. So we're just really looking for that pattern to set up and to complete out there. And that is the one that you want to be all over big time. You want to back up the trucks on that buy potential inside of the market. So that's what's going on inside of the daily charts. If we go take a look at, let's switch over here and go back and take a look at what's going on in the foreign markets. Most specifically, let's go take a look at what's going on inside the FTSE in the UK, down 2 6/10%, down 172 points. So that's a wide-ranging bar to the downside. The FTSE is had come down and tested its swing point low. Its swing point low, by the way, December the 16th. December the 16th, the top of which was 63.31. We're not down there right now, but I suspect that we will get down. I would think it would even get down there here today. So a big move to the downside. Its swing point low is October 16th. You can see the October 16th low inside the FTSE, totally different than what we looked at inside of the ES Mini, the NASDAQ, the Russell, the Dow, or the Russell 2000 as well. But inside the FTSE, back in December, it actually got down into those lows. So there may be a great deal to learn about the FTSE also. If we go take a look at and see what's going on inside of the DAX here this morning, the DAX is trading up 109 points, a little over 1%. Let me pull this back here. The DAX still in a nice little rising price channel. Let me get rid of the retracement ruler out here, make it a little bit easier to look at. So the DAX, you know, it's an inside, actually, the DAX today, just simply an inside bar. What's the meaning of an inside bar? If, in fact, that's how it trades today, it just means that the trend that it came from is likely to continue. But the DAX has got some horizontal resistance in the 10,000, you know, 034, 050-ish type level out there. But right now today, inside of the DAX, just really an inside bar. Pretty amazing. With the that just shows you how volatile the markets are. That we're driving the wide range, really more so than volatile. The wide ranges that with the wide trading ranges that the market has been moving within. And today's no different. Wait, yesterday about 450, 480 points. I can't remember the exact number out there, but quite a move. Now let's go take a look at the currency pairs. We're going to go look at the currency futures just so I've got the most current and accurate information. Let's start off by taking a look at the euro out here. Now the euro What do we know about this? Is a daily chart here for the euro, so we'll begin by taking a look at it. As we speak right now today, still no bullish reversal signal inside of the euro. Just because the bar is green, today's bar is green, that doesn't mean that it's bullish. All that it really means is that price opened at the bottom of the bar, and right now the price is trading at the top, not the bar, but the body of the candle, and price is trading at the top of the body of the candle out there. But no bullish reversal signal here as of yet. We do have a 1 to 1.618, A to B equals CD. What I had pointed out to you more importantly was the sideways movement is actually more bearish and bullish out here. Why do I say that? Because when the market gets into an oversold condition, and one of the ways we take a look at an oversold condition is by looking at that 14-period relative strength indicator out here. We saw that dip down to a level on the trading session of January 8th. Gets down to, I can't even read it, 19, what was it? Down below 30, start to get to oversold. It got down to 19.68 on the close of January the 8th out there. What we have seen is just ever since that trading session here, well, not really since January 2nd, but since January 8th out here, we've seen nothing more than just a sideways movement. And there's only two ways to work off a oversold condition, either a big bounce, which we have not seen in the euro, or a move sideways. We're seeing the most bearish of those patterns. Does that mean that it can't change? Of course not. It can change in a heartbeat out there. But what we know is the information that we have at hand right now, and the information that we have at hand says it's just moving sideways, working off an oversold condition, getting ready to take on lower prices out there. And that's the message of the euro. Of course, if it's going to take on lower prices, what's that going to do? Well, the move here that you've seen in the U.S. dollar index, big move with it backing off of its highs out here. It says that the move higher inside the U.S. dollar index is not over. If the euro moves down, I promise you the U.S. dollar index, you'll see it back up at its highs out here. So until we see a reversal there, now not that you're not going to have some other currency pairs that impact the king, because you do. You've got the pound. So you've got the pound, which is what, I don't know, 10 to 13% of the U.S. dollar index. In the case of the pound, this does look like it's made a bottom. After making the 1 to 2, A to B equals CD to the downside out here, that's on the daily chart. You had a nice bullish engulfing candle. We referred to that on January 9th. On January 10th or 12th, we saw that we had a bit of a follow through. Today we're getting even more follow through out here. Of course, it's got its work cut out. This little wide-ranging bar on January the 2nd out here. Shoot, it needs to get inside that low of 153.15 out here. But nonetheless, the Great British Pound suggesting, and that too, coming off of an oversold condition, but doing it with some bullish candles out here. So it's suggesting that it has at least found a intermediate term bottom out here, and that is putting some weakness inside of the U.S. dollar index. If we take a look at the Japanese yen against the U.S. dollar, this had a pretty big move to the downside as we speak. In fact, it's taking on its B point that has been used, that I have used as an A to B equals the C point, I should say, that I've been using as an A to B equals CD to the upside out here. So it's getting back into that December 16th swing point out here. That low is 115.57. So far, the intra-session low, about 116.07. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, let's go check out that natural gas contract out here. We pointed this out yesterday, I believe it was. So let me go grab. I got to switch tools here. Give me a moment here to switch a couple of things to go take a look at the pattern that we were looking at. File, workspace. Which one is it? It's. Come on, I should have done this during the break, but I was too busy multitasking, doing something else. Okay, so let's go put up the natural gas contract. That's right, I've got the continuous. I forgot to put up the current contract. Nonetheless, this will still work. So what we're taking a look at here yesterday, off of the highs, let me get my cursor out here. If you're watching this on Tiger TV, I hope that you are. If you're listening to us on the radio or your mobile device at TFNN.mobi, we appreciate that very much. Don't forget you can catch the live stream of this by going over to the homepage at TFNN.com. Upper right-hand side, you'll see some buttons. You can click on that. The show will stream live. You'll see that we're looking at the November 10th high out here. And from that high inside natural gas on the trading session of January the 12th out here, made a low, made a seventh wave, a seventh inning stretch pattern, as we like to refer to it. That's a pretty easy trade because your stop is really just 1 penny below the low of that session. Now, what you got here yesterday, we were taking a look at that intra-session. We got a nice little bullish reversal signal. You're seeing some additional follow-through as we speak right now. So, the minimum, what we're seeing is a counter trend rally. Because the question is, I know the question that you've got, is this the bottom? Now, I showed this other chart here yesterday, and this is kind of cool. I think this is kind of cool, at least. Maybe you'll think it's kind of cool as well. Let me put this up on the screen, too, from current slide. There we go. Okay, so here's the seasonal pattern for natural gas. Now, today is what? Today is July. Today's January 14th. Boy, how time flies, especially when you get the dates wrong out here. So we're at January 14th. Now, if we take a look at where my cursor's at, right here, well, I got to move over to the chart, and I'll give you the exact date of that low, January 14th. So right here, right this very where it shows this little bleep to the upside out here, the actual low out here, January 14th. So from a seasonal standpoint, I don't know how this works. I just know that it does work. Actually, I do know how it works. And how it works is a guideline for us to actually focus on and pay attention to. So it's so interesting that we were seeing natural gas give us a bottom signal. And look, it could be the bottom that's in, because I also recognize here that it's that little bit lower low that takes place on the 17th of January out here, right here where my cursor is at. And then we see a nice decent counter trend rally. So it's either that low that's been put in, or it's the one that was timed here with the date of January 13th, January 14th, putting in a bottom, a little bit of a counter trend rally, then a little bit of a move lower before you. But here's the deal. This shows that nat gas, for the most part, from a seasonal standpoint, ought to move lower into the time period, quite frankly, of about February the 18th out here. And then it ought to make a bit of a move high. It should make a fairly decent spike high for about 7 trading sessions or so into the February 25th time frame. So that's what's going on inside nat gas. Let's take a look at 2 different chart patterns that are out there. At this stage, you got to go with this one here that gives you that 7th inning stretch, gives you bullish engulfing, gives you an A to B equals CD to the downside as well. So if we take a look at that pattern out here, you know, your A point being out, come on, click on that for me. Here's your A point, and your B point we'll use right down here at the D level. Back here, retracement, about a 36% retracement. And it makes just about a 1 to 1.272 A to B equals CD to the downside. So that's on natural gas. I was taking a look at the current continuous contract out there. With regard to light sweet crude, hey, not so fast. So we take a look at light sweet crude, straight out at 46 bucks even Steven. No such thing as a reversal candle here. It is the current contract that we are looking at. You got a little bit of a doji yesterday. The doji doesn't mean anything at the lows. Doesn't mean much in the way of when you're inside a move out there. It just means that the market is a little bit tired. That's all. But it's not a reversal candle, not a reversal signal. That in combination over a couple of days can be. But at this stage here, and you're in the extreme oversold condition. Of course, we know light sweet crude has been in the extreme oversold condition since December the 24th out there. So just moving sideways, just working off that condition as well. If I take a look at a 30-minute contract here, let me switch back to a different workspace out here. There we go. We take a look at the 30-minute contract for the ES Mini. Give me a second, have this thing pop up on the screen. What we do know coming into the market open is we were making a lower low, doing it with less relative weakness out here, and that's the low that was coming in as we were coming down the air at 9 o'clock as the ES Mini got down to that level, that price level of, what is it, 1985.25 out there. No reversal signal here as of yet at this stage of the game until we see otherwise, such as a bullish reversal signal. We should expect some lower price here this morning. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow off 188, trading out at 17,423. S&P down 18 at 2,005. Composite off 38 at 4623. Russell 2,000 down about $13, trading at 1167 out there. DAX off 106. FTSE down 105. Gold up $6. Silver down 19 cents out here, leading the charge to the upside. It's Netflix, NFLX up 2%, up $6 and change as we speak. Mohawk Industries up 2.5%, up $4. GameStop, GME up 11%, up $3.68. Zyopharm Oncology up 57%, maybe a buyout out there or something. ZIO, maybe they saved the
Let's see, Intrazel Farm and MD Anderson, an exclusive deal, I guess, out there. So that's what that's about. You've got Forest City Enterprises. I like that. Forest City Enterprises out there. Caught the end of Saving Forrester, one of my favorite movies out there. I don't know if you've ever seen that, but it's hard to turn that off. Anyways, Forest City Enterprises up 9%, up a couple of bucks out here. Tesla, you watch that same movie. It never ends a different way out there. Why is it that we do that? In any event, that was just kind of the veg. It was a half an hour worth of vegging. You got to like that. Tesla, that is lead the charge to the downside, off 15 bucks right now, down 7%. Magna International, that's off 5%. F5 Networks down about 4%, off 472. Barella down 5.5%, off $3. Visa down $3. Baidu off about $3. Bit Auto Holdings down 270. That thing has been struggling as of late. Goldman Sachs down 259. Let's go take a look at some of these equities here that are moving and grooving in the marketplace. Seeing a little bit of a counter trend bounce as we speak here this morning. Let's take a look at Mohawk Industries. Haven't looked at this in quite some time. This is trading out right now at 165.76. Was there some earnings on this? Must have been out with earnings. Let me see here. No. Mohawk Industry announced purchase of, so they purchased somebody. Nonetheless, let's go take a look what Mohawk Industry is doing out here. Looks like this is at an all-time high, at least 52-week high, if not all-time high out here. So this thing, let me see what it most recently did here. Come on, work with me, Mr. Cursor, Mr. or Mrs. Cursor. So the swing point out here, the B point of an A to B equals CD to the upside. That was formed on December the 11th. 760,000 shares traded that day. You got up over with 1.1 million shares. So you got a nice confirmed A to B equals CD to the upside. Inside of Mohawk, there's not going to be any kind of Mohawk given inside of this equity, not until at least forms and completes its A to B equals CD. Now, the 1-to-1 says this has got a price target of 181. I'd have to give it a new price target of 191 out here. You're trading at 165 as we speak right now. Very strong, like bull looking chart out there. MHK is the ticker symbol. If we take a look at GameStop, GME is a ticker symbol out here, up 11%. They are out with numbers as well. So they are suggesting they've had some strong holiday sales. It's trading off of its session highs. Nonetheless, it did gap up this morning. It's trading out right now at 36.23. GameStop's got some major problems. Got a huge supply line that took place when this equity gapped down on November the 21st. There were about 19 million shares behind that move, 615,000 shares here as we speak today. If we put this on a little longer term chart, meaning a weekly chart, let's go see what it's doing on a weekly basis. The weekly chart here says that all it's really doing is trading. Well, let me pull this back even further. What is GameStop here doing? Let me see here. You've got just really consolidating. Ever since about May, it's trading right around the levels of May in 2013. We're in January 2014, so it hasn't really done much in that time period. Let's take a look at some things that are moving to the downside. We'll kind of flip back and forth here. And then we'll go cover gold, silver. We looked at light sweet crude. We looked at the currencies. So at the end, I think we took a decent overview of what's going on inside of the market. But if not, give me a call at 877-927-6648. Happy to look at whatever it is that you need some additional eyes on. If we take a look at Tesla, she's trading down at 191. Let's go see what kind of volume we have behind this move. Now, Tesla had made a high out here back on September the 1st. It got up to a high of 291.42. You're trading $100 lower right now. You're trading at 190.38. Volume behind the move so far this morning, pretty good. 13 million shares. Last time Tesla had any kind of breakout-ish type volume, where was it? Well, unfortunately for Tesla, it's all the way back here at $58. So I'm not saying that's where it's headed, but it is that's really where it broke out from. Now, in the case of Tesla, what it is doing that you need to be paying attention to, or one would want to pay attention to, would be, because we are seeing a series of lower lows and lower highs. So that's unquestionable. We are seeing a swing point back here. This is a weekly chart, by the way, that we're looking at. That is May the 5th. So on May the 5th, for that week, that began May 5th, 49 million shares. So far, I'm sorry, so far for the week here, we're only into Wednesday, it's done 13 million shares. So pulling back with what seems like light volume out here, but that swing point ought to get tested. That swing point low, 177.22. So I would have to say that is the price target for Tesla. At least that's what the weekly chart says. Let me see what the daily chart here shows us. So the daily chart shows a gap down below its most recent swing point, bullish engulfing candle. That's never a good thing. That low is 192.65. So you're trading down below that. The swing out here, it's got a little bit of volume in it. This would be the May 8th level. That's down. That's that 178 even, Steven. Hey, now we got K Rico on the line. K Rico from Pompano Beach, formerly from Costa Rica.
Hi, man.
How you doing, my friend?
Yeah, everything's good. Thank you. How you doing?
Good. Your voice sounds nice and strong.
Yeah. I'm flowing along now. 3 weeks, and I'm gonna re-enter Costa Rica for work, pleasure, and fresh fruits and vegetables every day.
Ah, okay. All right. So you got the all clear from all the professionals?
Yeah, actually, that's the way it went down. Yeah.
Oh, that's great. Okay.
Gotta get on the horse again. Gotta be psychologically strong and keep moving.
Okay, that's good. That's great. Now, you wanted to take a look at, is this a 300% ETF for natural gas?
I believe it is. Yeah. Because you went over the natural gas a few minutes ago, but I was trying to figure out. Anyway, I'll let you go at it, because UGAS looks like it's had a last 2 days. It's had a upside way, quite a bit for percentages, but
it
I think it's going to come back down.
It has. So, the when we take a look at the natural gas contract, one of the things that so there's a couple different patterns that are in play out there that one could, if one is inside this trade, that you should be, that I would want to be focused on. I'm not in the trade, but here's what I would be focused in on. First is, now I've got the continuous contract that I'm going to punch up onto my screen here. I meant to put the current contract, but it should work out the same way. And that is, if you are a follower of the Chapman wave, and I think that you should. I think that everybody should be taking a look at this natural wave count pattern that is inside of the market. One of the cool reward to risk trades that is out there is playing. You're a big Detroit Tigers baseball fan, so I've renamed it, K Rico. I've renamed it the 7th inning stretch because it is the 7th wave count on the way down. And in the case of natural gas, from the highs out here in November, it made a 7th wave countdown on, it actually confirmed that on yesterday, January the 13th. And it confirmed that it had a nice little bullish engulfing candle. Now, the cool thing there is that you should have a stop right underneath the low of January the 12th out there. And the real question is where does this thing bounce to? Or is this a bottom? And it could be either or. That's with regard to this pattern, he suggests that it's a fairly decent bottom. If it's a fairly decent bottom, and we're looking to see where this thing would trade to, what I would be using for a target, I'd always use the most recent swing point. That's going to be December 15th out here. So that's somewhere between the price level of 368 and 390. And I would be taking a look at, hey, how's price moving? If in fact the first stop is going to be the 0.382 retracement. So the expectation I would have is that people will get off of the trade when natural gas hits about the 321 level and you're at 308. That's still a pretty decent move from where you're trading right now. If coming into that price level, K Rico, you see a wide-ranging bar, it would suggest that this actually ought to bounce up to the last to the 0.618 area, or really it's gapped down from December 22nd, and that would be right around the 335 level. That would be a natural area of resistance. So I would say the price target on a bounce or a bottom is going to be that 321 to 335 out there. The only thing that those that are trading natural gas need to be concerned with is the other chart that I had put up on the screen, K Rico, and that's the seasonality chart. And the seasonality chart shows this. It shows that natural gas, and this is a chart pattern that is over the course of the last 11 years. So if we utilize the last 11 years worth of data to understand peaks and valleys out here, what this tells us is that natural gas doesn't really form a significant low until the February timeframe. which is right here in this area if you're watching us on Tiger TV. What natural gas does show us is that says natural gas typically during this cycle, and this is based on this pattern here has been pushed forward to the trading days in 2015. That allows me to be exact with regard to when it makes peaks and valleys. Now I use this as a guideline, much like the character Barbosa would be in Pirates of the Caribbean. And that said that we should be putting in a low, a bounceable low around the 13th and 14th of January, exactly what has taken place out here. So it says it has a bit of a spike and then it moves down. I don't know. I would play the seventh inning wave stretch pattern versus this, but it does say that the move here, makes a high right around the trading session. I'm trying to get this to work on my other system. January 22nd. It says that right around January 22nd, you should expect natural gas to peter out. And that's just the seasonal pattern that is inside the natural gas contract. Does taking a look at it like that at all help you, or what are you looking at that might that I should also set my eyes on?
Well, we have to consider also the weather that's going on up north, because that's a determining factor in a sense, part of the computations that you might throw into the equation. But no, I was looking at that chart that you just put up, that you had put up 5 minutes previously before my call.
Yeah.
And I was trying to, take a snap picture of it and then study it later tonight.
Yeah, take a picture of it right now, because I know that the natural intuition is that as we move into the cold season, that natural gas, that's the time when natural gas ought to really begin moving higher. But what I can say is, it starts to get cold in November, right? Right after certainly Thanksgiving time period. And what's so unusual, or not unusual, the pattern of natural gas over the course of the last 11 years is that natural gas actually peaks in the first week of December. And people I would be thinking, right, if I hadn't looked at this, I'd be thinking, nah, it's not going to peak in December. I mean, you're just starting to get the weather really churning. Right. That is not the case, because over the last 11 years, the actual day, well, according to this calendar year, in for December of 2015, it ought to be December 4th when it actually goes ahead and makes a peak out there and then starts to move lower. So it is a chart tool and a chart pattern to pay attention to with regard to seasonal type averages. But then I say you really fall back to, hey, what's the chart pattern that's in here? And the chart pattern is that this thing's made an A to B equals CD to the downside. It's made that seventh inning stretch. You've got a bullish engulfing candle. You're seeing a bit of a bounce. 321 to 335 to 347 ought to be where this thing actually moves up to. So if you were in the trade, I would say you'd stay in the trade. And if you get a close below the low of January 12th, it says there's some lower prices coming at you.
Okay, I'll watch it. I also wanted to tell you I've got an unbelievable Detroit area photos from back in the 1900s with a simple, beautiful overlays that bring us up to date like in the last 5-10 years.
Oh, cool.
Unbelievable. Some of the old-time streets and the buildings, and then when you see what's built right in the exact same spots, that's what this photos do. Terrific photography. Someone had a great idea of technological overlay production.
So is it a digital thing that you look at, or is it a book, or something with some type of plastic sheets that you move over the top of it?
Yeah, but it's done automatically in the email. All you got to do is take your cursor from the far right corner, and your mouse is there in the far right corner, and then go right to left from the right bottom corner up to the left top corner, and the change of the scenery does it for you.
That's cool. That's cool. That's very cool. Hey, send me a copy of that if you get a chance. That would be cool.
I'll do it right now. It's the coolest thing. I'll never delete that email, because there's such fond memories rush back from just looking at what, 40 years ago when you and I were running around Detroit.
Yes.
Well, okay, we know what was going on 40 years ago, but then go back to 1900. Now we're really talking. Oh my God.
Yeah. Oh, that's cool. That's very cool. Oh, that's great. I'll look forward to seeing that. And you're right. That is a great idea. That's a great idea for any city out there.
Yeah.
So, Hey, K. Rico, we're about to go to break. Hey, best of luck to you. Safe travels if I don't speak to you on when you head back to Costa Rica. It's good to hear your voice. Great to hear that you are long and strong. All right, so safe travels, my friend.
Thank you very much. Thanks.
You bet. Right now, we got the Dow off 194, S&P down 18. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 2 1/4 right now. You've got the S&P down 20 points, composites off 33. Let's take a quick peek here at, let's go look at a couple of things. Let's first take a look at the summation index here. Where do we want to take a look at it? Let's look at the NASDAQ composite. Let's go take a look at it as we speak. Now today is going to be an important session for it. Actually, I take that back. I take that back with regard to today. Now, what the NASDAQ composite is doing, if we were to get down, if that price oscillator would get down into the minus 65 or minus 45, it's where bottoms can form inside of the composite. But we'll see if this can actually move to a lower low. The NASDAQ composite, that is, that would be getting below the January 6th swing point, or can it test the low, which is 45.67. Right now, you're at 46.31 as we speak right now. If I take a look at the VIX index out here, VIX index, the VIX index, as I take a look at this chart on my screen, now you're looking at 6 different quadrants. So if you're going to snap a picture, this is a picture that you would want to snap. And I can tell you that as I take a look at this, and I'm not going to tell you what I'm looking at, but I'm going to tell you what it is that I am looking at. It's one of these 6 little quadrants here. Tells me that there is a major bottom that is going to be forming here in January because of the behavior, because of the behavior of the VIX index. Here's what it is that we know as we speak right now. If I take a look at this chart here, which is the VIX index on the top, it's got the 50 period Bollinger Band 1 standard deviation for those bands out here. You know, it's getting stretched. It's really getting stretched out here. It doesn't mean that it can't stretch a bit further, but it can out here, and it gets stretched like this, and this is where it typically identifies some fairly significant bottoms in the market. Of course, we also know, though, that right now you've got the VIX trading above the 50-day exponential moving average. That's this chart right here. 50-day is set out at 1685. You're at 2248. Of course, what you know, what I know, is anytime the VIX trades above this 50-day, that's where you start to see the real carnage inside of the market. That alone is a beautiful tool. That alone is a way and a method and a tool to be able to use to understand, should you be on the long side or the short side of the market. Doesn't tell you using that as a tool to identify tops and bottoms. That doesn't work for you. But it does help you to be on the right side of the market out there, and that's a good thing. Excuse me, sorry about that. Real quickly here, back to currencies. If we take a look at the Euro-Japanese yen, that's not a currency pair that we looked at here as we looked at currency pairs. She's made the 1 to 2 A to B equals CD to the downside. This looks it is in the oversold condition. No bullish reversal. I did see a couple bullish or what looked like some bullish reversal signals. I think it was on the 120-minute time frame chart out here. Let me see, on the 120-minute time frame. Well, you got this little hammer candle that formed right here at between 8 o'clock this morning, so between 6 and 8. So this low out here, actually, from the hammer, it's not the actual low of the trading session. It happens to be the low of the session at 8 a.m., between 6 and 8 a.m., 137.12. That gives us a piece of information inside of the Euro-Japanese yen. It's possible that it's trying to form a bottom out here on the daily chart, having performed the 1 to 2 A to B equals CD, but I need to see more proof of that. Otherwise, looks like lower price. If you were wondering why the Dow futures were down, I don't remember, was 170 points or so, 180 points, something like that earlier in the morning, was because this currency pair was pushing lower. It's as simple as that out there. So, folks, it is Wonderful Wednesday as always. Thanks so much for joining us here at TFNN. Have a great day. Hopefully, you're going to stick around for hour 2 of the Trader's Edge, but if not, I'll pick it up again tomorrow morning, 9 o'clock. Have a great day. Look forward to seeing you soon, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.